Hooty hoo! Welcome today. I'm Tall Mike. So glad you're here. Well, it's Monday. Markets are back open. What's going on today? Dow's up about 40. Nasdaq's down about 20. Kind of a flat day. We started off a little bit on the low side, already moved up to the flat line. Now, somebody maybe explain this to me. What happened over the weekend? Well, we had those military airstrikes, right? What happened on Friday after the market closed? Well, Moody's, they downgraded our credit, right? Downgraded it from stable to negative. But none of this has any effect on the market. Market's completely flat. Market is bulletproof at this point. I do think the market's going to be going higher. Still expecting a little bit of a pullback, maybe as low as 4,200 before we take it up to new highs. I mean, this market is really an illusion. Has nothing to do with reality. It's the illusion of the marketplace. Now, somebody explain this to me, right? All right, so we got all this extra money to pay for all these wars. We can go fly the jets over and drop the bombs. We got money to do all that. We can fund 2, 3 wars, but we don't have money to fund our own government. Somebody explain it to me, right? I mean, I don't get it. Okay, back to the stock market. So the stock market, well, it's kind of going sideways right now, right? We had the big run up in the last 2 weeks. Nasdaq's up about 10%, and now we're kind of going sideways. I think we'll get a little bit of pullback before we head higher into the end of the year. This market's an illusion. They want to push it higher. That's just my take. Yours may be completely different. All right, let's get over to the real estate market now. Okay, so in the real estate market, there was an article that came out. I love reading the articles, but it came out and said that equity jumped by 44%. 44% from the year 2019 to the year 2022. Now, that's interesting. I believe that because they printed all the money and houses went up by about 40%. Sure, we'll go with equity jumped by 44%. But what the article doesn't tell you is the equity is starting to drop at the fastest rate in recorded history. Now, why is equity dropping? Now, it's not that house prices are going down. House prices are going down slightly, 5.6% on a national basis, but the equity's dropping. Why? People are actually taking out HELOCs. The real desperate ones are even refinancing, going from a 2.8 to 8%, but they need the money, so they're going to refinance. You see, the equity is starting to fall. It's starting to go away. Now, the article goes on. Now, this is Jason. I guess he's the chief investment officer at New American Funding. In other words, he's in the loan business. He likes to make loans, right? And he wants to make a lot of loans. So he's saying this is just the best time to buy. It's the best time to buy. Now, I don't see it quite that way. We got prices close to record highs. We got mortgage rates that are, they're up there, doubled and tripled from the 2.8, doubled for sure, almost tripled, right? They're at a 2-decade high. But yet he's saying this is a great time to buy. You see, he says it's inevitable that rates are going to drop. Now, I don't agree with that. I don't think it's inevitable that rates are going to drop, especially mortgage rates. Okay, so the articles, they come out and they all tell you mortgage rates are crashing. Yeah, they crash from like 7.8 to 7.7%. Big crash, right? But he says it's inevitable that the rates are going to drop. And of course, that's going to shoot houses up higher. And when the rates drop, you can refinance. Well, number one, if the Fed does pivot and goes back to 0%, they're going to do that for a reason. That reason is going to be a bad thing, right? And that's going to make houses go down. So you may not be able to refinance, but I don't think that rates are going to drop. My take is that the long end of the curve is going to go higher, much higher. The reason is the debt bubble, the printing of money. I mean, we're at a pace right now, about 5 trillion a year. 5 trillion a year that we're printing. 4 years, we'll add another 20 trillion to the 34 trillion we're already in debt. Totally not sustainable. So the long end of the curve, they're going to want more money in the payment of interest to loan money to the government. Because the government, I mean, they got their credit rating dropped from stable to negative. I mean, their debt should really be dropped to junk. There's no way they're going to pay it back. They don't even have a plan to pay it back. They can't even afford the interest. They got to borrow money, print more money to pay the interest. So the U.S. is in a lot of trouble, and people are going to start to see that, and they're going to want to charge more interest to loan the government money. If they'd loan them money at all, I wouldn't loan them money because you're not going to get paid back. You're not going to get your money back, let alone the interest payment. Now, okay, maybe they print the money and you get your money back, but it's worth half of what it was when you gave it to them. Does that really help you out? Maybe it does. So anyways, a lot of people are thinking that the long end of the bonds are going to be going higher, which is going to push mortgage rates higher, not lower. So we're at about 8%, a little below right now. But I think by next year, that number will be well into double digits, 10, 12, 14%. Mortgage rates are going higher. Now, what's happening with the delinquency rates? Okay, so are people paying their mortgage now? No, they're not really paying now. For the 5 quarters in a row, a year and a quarter, right? Okay, so delinquencies have been going up each quarter. Each quarter, people are not making their payments. Okay, now what else has been going up in that same time? HELOC loans, HELOC, home equity line of credit has been going up. Every quarter it's been going up right along with the delinquency rate. Now, why are people delinquent? Well, they don't have any money. Why are HELOCs going up? Well, they're trying to get money so they can stay in their house. Now, what else is going unpaid? Well, a lot of things are going unpaid. There's 20 million people out there. They're behind on their utility bill. Just the utilities. They can't afford to pay the utilities. Sure, they're trying to make that mortgage, but delinquencies are going up. So you're going to see these foreclosures coming. A lot of foreclosures coming onto the marketplace. Another thing people aren't paying is property taxes. Property taxes. Now that you see a lot of these courses, maybe they advertise even before my YouTube show, but these courses are how to buy tax liens and how to make 10 to 20% on your money. See, when people don't pay their property taxes, you can go in and pay it for them, and then you get to collect the interest that they're due because they're late on their payment. And if they're late on their payment for 5 years, you can go and take the house. You can foreclose upon it. So foreclosures are going like this. Now, most property taxes, I will agree, are attached to the actual loan on the property, but some people have their house paid off and they're not paying their property taxes. They can't afford them. Can't afford the property taxes even after their house is paid off. Very interesting. So property taxes are going unpaid. But all these things are leading to a surge in foreclosures, a surge in foreclosures. Very interesting, very interesting. That foreclosure rate surging. That's going to bring inventory onto the marketplace. Now, here's an interesting point. I want to give a shout out to Greg Matthew for this in the comments. He commented how the banks are no longer messing around, right? They're not messing around. They're going straight to foreclosure. They want to foreclose on these houses. Now, back in 2008, they tried to do loan modifications with you. They tried to put you in a forbearance program where you can extend your mortgage out, maybe even make it a 40-year mortgage. That was all 2008 stuff. Why? Because they didn't want the house back. Well, here's the thing. The bank still doesn't want the house back, but what they want to get rid of is that loan on the books that's at 2.8%, because when they take the house back and they give it to Tall Mike goes and sells the house to someone else, that new mortgage is going to be at 8%. They're going to get that 2.8% money off their books. So they're really rushing the foreclosures to the marketplace as fast as they can. They're sick of forbearance. They don't want to do it anymore. They don't want to do loan modifications. They just want to go straight to foreclosures. So this crash can be one of the fastest crashes that we've ever had in history, because the banks are in big trouble, big trouble, and they need to get these off of the books. They need to get those low loans off, and they need to get some 8% money coming in. So they want to foreclose, and they're going to foreclose as fast as they can. Okay, so that's interesting. That's interesting. Now, why do I say that home prices are going to drop by 50%? I mean, it upsets a lot of people when I say that. So why do I keep saying it? Because I believe it's true. Now, I'm a real estate broker. I should be saying this is a great time to buy, right? Get out there and buy. Buy, but it's really not. Never a worse time in history to buy. And I'll explain that in a second. But here's a typical example. Okay, so anyways, the normal income to the average price house. When someone goes to buy the average price house, their income is about 1/4 of the house. So if your income's 100,000, well, you go buy that $400,000 house. It's about a 4-to-1 ratio, right? Okay, so 4x, right? Well, right now houses have never been more expensive, no, more unaffordable. Right now we're at 7.6 times the average income, the average house, right? Okay, so when you making the average income now, you're almost buying a house that's 8 times. So you make 100 grand, you're almost buying an $800,000 house. This is a record high. Even back in the great financial crisis, it was at 6.8. And right now we're at 7.6. Well, what has to happen? Somehow we have to get back to normal. Normal is about 4 times. All right, so we're at 8 times. That would mean that houses come down by 50% and we'd be back to normal. Now there is another way. Okay, so we're at 8 times. Your income could double. Everybody's income in the U.S. could double, and that would bring us back to normal also. Now, I don't think the income's going to double. I think the houses are going to go down by 50%, 40% from here. We're already down 10% in most areas, but 40% more to the downside. This is just my take. A lot of your take is that we're going to go up. We're going to get that income up. And that's what I want to talk about. What if the Moon Boys are right? What if the Moon Boys are right? Okay, what if that $400,000, which is about the average price about $420. Okay, so what if that $420,000 house goes to $1 million like the Moon Boys think? Now, the Moon Boys think Bitcoin's going to go to $1 million also. So you'll be able to trade 1 Bitcoin for an average price house, $1 million and $1 million. This is the Moon Boys. What if the Moon Boys got it right? What if I got it all wrong? Well, let's think about this. All right, let's go back to the 1970s. All right, in 1970, the average price house, well, it was about $23,000. $23,000 in 1970. All right. And then throughout the 70s, well, the houses doubled. They had inflation, and that $23,000 house went to a little over $50,000, let's call it. Okay, so it doubled. The Moon Boys were right in 1970, right? They were right. The house doubled in value. All right, now here's what they don't tell you. Okay, here's an interesting thing. All right, so I'm talking about the wealth transfer a lot. Wealth gets transferred from one person to the other person. But now, okay, so the average price house was $23,000. What was the price of silver in 1970? 1970, well, I'll tell you, the price of silver was $1.27. $1.27 for 1 ounce of silver. Average price house was, well, it was $23,000. Okay, so it took 18,000 ounces to buy the average price house. 18,000 ounces to buy the average price house in 1970. Now, if you got all the way to 1980, it took about 800 ounces. Went from 18,000 ounces of silver in 1970 to 800 in 1980. Very interesting. Right now, if you had taken your 23,000 and put it in silver, instead of putting it in the house, you could almost get about 20 houses in 1980 when you could only get 1 house in 1970. Okay, so you could add 20 houses if you just sat and waited, put your money, your savings, if you will, into silver, and you would have 20 houses instead of 1 house. Now, where are we at right now today? Well, today takes 19,000 ounces of silver. Spot price silver, $22. Average price home, about $420. All right, so that takes about 19,000 ounces of silver. The houses have never been more expensive in terms of silver. And eventually that's going to adjust. I think it's going to adjust to where 500 ounces of silver will get you the average price home. Now, is silver going to explode higher? Possibly, yes. Is the house is going to collapse? Possibly, but it's probably somewhere in between there, right? Okay, everybody say, but Mike, it doesn't work that way anymore. People, you got Bitcoin now. Everybody's going to buy Bitcoin. Nobody's going to buy silver, and that's fine. The Moon Boys, they're going to got their Bitcoin. They're going to trade 1 Bitcoin, $1 million for 1 average price house, $1 million. They're going to trade 1 to 1, and that's what the Moon Boys are going to do. Now, I'm an old guy. I'm going to take my chances, right? I'm going to buy 500 ounces of silver. It's going to cost me, well, it's going to cost me, let's just call it, I don't know, $12,000. All right, so I'm going to invest $12,000 in 500 ounces of silver. And I'm going to see if someday I can trade that silver for the average price home. I think that's going to happen. I really do. I think we have a lot of problems in the country. I think we have this debt bubble that's going to pop. And when the debt bubble pops, I think the currency is going to be reset. There's going to be a reset. Now, a lot of people think the reset's going to be in Bitcoin. I don't think it's going to be in Bitcoin. It's possible. I'm not saying it's not. I don't need all the Bitcoiners to come in and hate me, all those moon boys writing me the hate comments. It's possible. Maybe your Bitcoin's at $1 million and the house is at $1 million after the debt bubble pops. But I see it playing out a different way. I see it playing out where the houses come down and silver goes up, and 500 ounces of silver will buy you a house. And everybody can leave me a comment telling that tall Mike guy, he's crazy out there. This is all I got for today. It's a Monday, everybody. Get out there, enjoy the day. If you like this stuff, give me the thumbs up. Why not? If you really like it, punch the subscribe. Oh, man, we got some exciting stuff coming later in the week. We got the inflation number coming out. We got a lot of stocks earnings and all kinds of fun. Get out there, enjoy your day. Bye-bye now.